What's everyone? We were live once again. I'm sitting down today with Jerremy Newsome. How's it going, Jeremy? What's up?
My man, it's going good. How are you?
Awesome, perfect, love it. Full of energy as always. I love that.
Yes.
So today we're going to talk about how to make a living trading for OPM, so other people's money. Something pretty
Yeah.
interesting that I've been talking about quite a lot in the past. I know Jeremy has some experience with this, and we're going to share some resources, some tips, some advice on how we can do this. But I first want to start, Jeremy. You've been here a few times already, so people know about you for sure. They can watch other videos from you that we did together, like a month ago or a little bit more. But
Yeah.
why should people trade other people's money? Why would that make sense?
That's a great question, man. Why would people trade other people's money? I mean, the thing is, it's a mindset shift. And we kind of talked a lot about mindset in our last interview that you and I had together. And again, I appreciate your time so much, man. Thank you for doing this with me and putting all the hard work and time and energy that you go through to make this happen. So I just want to say thank you. But regarding the mindset shift, a lot of people are afraid of losing money, and they're afraid of losing money that they don't have. And so therefore they never look at trading other people's money. But we do it in all facets of our lives. So credit cards, if you have a mortgage, you're using other people's money. Most accounts have margin anyway. So margin is obviously 1 to 2. So, if you're buying stock, or if you have a stock portfolio, most companies already offer margin anyway. So if you have a $50,000 portfolio, you actually have $100,000 that you can trade with, and that's money that's able to be used. So in most of our lives, we already use other people's money. It's just the mindset shift of knowing how to do it properly, and that's really what's the key.
Yeah. And so one question I get a lot, and you guys, by the way, you can ask any question you want to get today. Basically, we'll answer anything you want to hear about. And basically, like Jeremy and I can answer pretty much anything you want, but we want to focus on that first. So for people starting out, like when to expect to trade money for other people? Would that be from the start, or do they have to have some experience with that first, or how would you see this first?
Yeah, beautiful question. And that's super important, very integral that they get that understanding down, because you don't want to go out and just lose money.
Yeah.
But the good news is, in most trading atmospheres, at least the ones we're going to be talking about today, most of them protect you from losing a certain amount of money. So your risk is managed, your risk is controlled, and most of the time you can only lose your money or a certain small portion of their money. And I would obviously 100% agree that you want to have some experience in trading before you trade any money at all of real money. Like, you want to get a general idea of how the broker works, how to put it in order. Dude, it would surprise you, but most traders that I come in contact with, even after a year, don't fully understand what's the stop limit, how to implement a stop limit trade, how to do limit orders, what's the difference between an MOC, market on close, and limit on close. Just those really basic concepts, I truly do feel, are vastly underutilized. And I would say it's a very good idea to go into a broker, practice with fake money, get a general conception of how to use a broker, when to get in, how to place the orders. And then once you have a general understanding of that, at some point, if you trade, even if you use other people's money or not, you're going to want to have a systematic plan and a set of rules. And that's exactly what we talked about in the last session that you and I had together, is like just building those rules and having those plans in place.
It's powerful. So for people doing this, should they? Because I think there's two ways to go about it. So you can either kind of start an investor on your own, which means you're gonna probably send email, talk to people, create relationship with different people, or you can go the route with like some platform online that give money to other people to trade. Some platform you can pay an amount of money, they're gonna give you, let's say, X $1,000 to trade.
Yep.
So I feel like it's two different things. Because one, you have to be actively searching. The other one's like you just go there and you get the money. So how would you go about it? Because I know there's different ways, but would you recommend one in particular, or how would that work?
I do. And the first thing I would mention when I talk about other people's money is I would not suggest under any circumstances using friends or family's money. So
Why is
that's
that?
like,
I'm curious on that.
yeah, that's a no-no. And the reason is because it will vastly change your relationship with that person most often. And you don't really want that, because money, especially as a newer trader, money is a very visceral idea. And my one of my perceptions and thoughts about money is an idea. And if you want more money, you need to think different thoughts. So with a lot of people, money is very rooted into their everyday lives, into their relationships, where they buy, where they live. And if you borrow money from your parents, which I did, and if you borrow money from a friend, which I did, and you lose that money, which I did, everything changes. And it's like a massive impact. The pressures are insurmountable. You start feeling and using that money differently because it's not yours. And I'm not referring to like a professional from like a hedge fund perspective, trading other people's money. I mean, when you first start trading, man, I mean, even legally, you should really do it. You know, it's frowned upon in legal instruments where, you know, you should be borrowing other people's money, because you are liable, or you can be liable, or could be held liable if you lose their money without proper contractual agreements and things of that nature. So I tell people all the time, man, I would just shy away from that entirely. You can borrow money. I'd rather borrow money from a credit card way before I borrowed money from my mom and dad, because that's your mom and dad. You know, if they give you the money because they love you and they have plenty, and they have to go, hey, here's $5,000. It's a gift. I love you. You can receive that. That's one thing. But if they go, hey, here's my retirement, I have $300,000, go trade it for me, just be really cautious on that. Make sure you at least know what you're doing. You have a lot of background. You have some experience. You have a very properly defined risk plan, because I'm telling you, you might be a good trader, but what will happen is your mom will start calling you every day. Why am I down 1%? You know, what happened to this stock? And they're going to be all like upset. Like, they're not going to understand that the market moves. They're not going to understand that it's this like bigger picture. They're thinking, oh, my son or my daughter, they're a stock market guru, so they're going to make me millions of dollars in a few months. You know, that's that perception. And so I would probably say just shy away from that altogether. However, to really get back to your main question, there are really three types of instruments that you can use to trade other people's money. The most common is equities, and is often referred to as prop trading or proprietary trading, which is pretty much you put in a certain amount of money and you get a certain amount of money from the fund to trade with. So for example, I'm partnered with a hedge fund, and they provide $30,000 of allocated funds to trade with if you put in $3,000. So you're getting an additional $27,000 of allocated funds to actually day trade stocks with. Now, I don't know any firm that offers leverage or funds for options, because options are already leveraged. You know what I'm saying? If you have $3,000, you can trade options. Like, you don't have to use other people's money. It's already built into the instrument. They're not very expensive, but you do have that application and that ability. And to answer, you know, Chris's question, Chris said, "What's the split?" It really depends on, and it really determines what company you're going with. Most splits are somewhere between 80-20 and 90-10. That's usually most splits, meaning if you make $4,000 in a month, whatever firm or company you're trading with, they'll keep either you'll keep 80 or 90%, and they'll keep either 10 or 20%. It just depends. You know, it's just like a bank or any other company, like a broker. It's going to depend on their commissions of what it is that they keep.
I've seen this work better before big companies. I think individuals where you trade for them, because I've traded for individual people before, and it's closer to like 50-50 usually, or a little bit kind of more adjusted, but it always depends for sure.
Bingo. Yep. And like I said, if you do borrow money from an individual, it's normally because that's all the money that they have to an extent, right? Meaning let's say they have $1 million and they give you 200,000, they don't have millions to lend. They had that million and they gave you 200,000. So they're going to want a 50-50 split, which is a lot, by the way. And it's a lot better to borrow money from a fund or a firm, because that's how they make money, and they have a lot of it. So they only take a small cut, which is, like I said, usually 10 or 20%. And the ones that I'm partnered with, it is 10%. and they're the ones that take a 10% fee when you withdraw your profits, and that's super useful, I feel like. So the ones, I guess, to finally answer your question, the two that I would partner with, the two that I would suggest, if you trade equities, shoot me a message, email me. The Bulls on Wall Street, that company with Canal, they offer a program through their Click Fund that they, again, offer capital asset allocated funds to trade with. Equities, if you want to trade equities, you get 30,000 for 3. And I also have a really good affiliation and a partnership with Top Step Trader. They offer Forex and futures. So if you trade futures and you trade Forex, they give you a simulated account to trade with where you pay like a monthly fee and you're trading through the simulated account. And as you trade through the simulated account, you're testing your skills, you're testing your abilities. And if you pass the test, they'll give you money to trade with. That's a phenomenal thing. I mean, that's incredible insight and offers that they provide, at least in my opinion. I think it's a no-brainer, right? They give you fake money, you practice, you get to a certain degree, and you're like, yep, I can do this. I've proven it. I know I can do it. Bam. Once you're in, once you pass, once you get that certain threshold, then you get that money to trade with, and that's a win-win from there.
Pretty cool, awesome. And I think I've added those links below in the description. These guys can let me know. I'm not sure, but I think they're there, so you can check this out. If not, we'll add them later, something. Or
absolutely.
Something, yeah. So once you get there, like, from my experience, training 40 people, you get more in this feeling of having a job, and that can be useful, I feel, to some extent, because you have to perform, you have to be there, you have to do things correctly all the time. I'm not sure if you've seen the same thing, but then, like Alejandro said, some firms have a really strict rule for like risk, and they don't want you to lose too much, or they require you to have this kind of measures. So have you seen this in the past, or how does that work typically in firms?
Yes, very much so. So I have actually a few clients and customers who have traded through firms that offer leverage and offer capital in New York City. I'm not going to name any names, but they're pretty big banks. And again, the table, the more money that you bring, the more money that they'll give you. But yeah, dude, they're serious. Like companies that give you money to trade with, they have very strict cutoffs. And normally for most what's called prop shops or prop firms or proprietary firms, a lot of the ones that I've had access with and I've worked with in the past or partnered with or worked for in the past, they will literally say, all right, man, here's what I want you to do for the first week. I want you to buy 1 share a day. Just 1 share a day. That's it. Obviously, you're not making money with that share. They want to make sure that you're not going to go in there and be a gunslinger and just start like firing off trades and doing something crazy. They want to make sure that you can follow a set of rules, right? They want to make sure you can follow a system, and they want to make sure that they can give you rules and you can follow them. So a lot of prop firms or a lot of firms that offer leverage, they do have risk parameters in place, usually every day, meaning they will freeze your account for that day if you lose more than their risk parameters. Let's say it's $100. And normally you can decide and you can tell them what your risk parameter is. For example, most of them, at least the ones that I work with, well, it's they start off at like $500. So if you lose $500 or more in a day, you're frozen for that day. But you can lower that if you want. You can lower that to 100 or 50 or 75 or 200. You can get that lower, that risk parameter, so that way you don't get your account frozen.
That's pretty cool. So that's a good way to make it happen. And it's also better for you too, because you don't have to kind of go forward and do so much. Yeah. And I think there's a difference between the firm that are scams and not scam. They kind of test you first, as opposed to just asking for money on day one. I think that's the biggest difference.
Bingo. Yep. So if you have to pass some type of test, which is the same for me. So if you go through the fund that I'm partnered with, the Click Fund, and you go through that, you have to take a test before you can ever get the funds. You're not just wiring money to an offshore account in the Bahamas. So, when you're wiring money off of this offshores, it's always like, you got to kind of question that. So it depends on how safe it is, obviously, and there's always things like that you really want to make sure of. But what you hit the nail on the head, man, when you said It's different than other companies. Meaning if you go to Charles Schwab or E-Trade or TD Ameritrade, you're trading futures or Forex, on Forex.com or FX.com, and you're just going through a normal exchange or normal broker and you lose $100,000 in a day, they don't care. Like, you're not even going to get a phone call. And I tell people very frequently, even if you do have a large account, you probably actually want to start trading with other people's money so that way you can lose a small portion of your funds just in case something bad happens, right? Kind of like a worst case scenario. I think that's a really important process to consider.
Yeah. So where would you draw the line between starting too early or kind of too late trade for the people? Because I feel like you can start from day one, but then if you're not profitable as a trader and you lose more money, then it's not really a good thing, you know?
Yeah, no, without question. I mean, when it's too late, I don't think that there's ever a time where it's too late. There's definitely a time where it's too early. I mean, bottom line, you to yourself, even if it's fake money, that you can make money. Here's the thing, here's the truth, man. Money virtually, trading the market, whatever market, futures, commodities, Forex, or stocks, you can make money in real trading account. The only difference is right here. That's the only difference. What's the difference between fake money and real money? It's your perception. It's still numbers on the screen. It's still going to move the exact same way. If anything, it's harder with fake money because you get delayed data. So if you can make money in virtual trading, there's no reason why you can't make money in real trading. It's all a psychological thing. So anyway, to answer your question, prove to yourself that you can make money virtually first. And if you can, most firms and most companies that you work with and partner with, it's not that big of a requirement, realistically, to go in and to pony up some cash. I mean, we're talking $3,000. Like anyone can get $3,000. And with Top Step Trader, it's even less. Like, it's a monthly amount that you have to buy into, right? I think it's like $170 a month. So it's not even, you have to have that $3,000 up front, which again is phenomenal. So you prove to yourself with a small amount of money, and again, even if you have millions or 100,000, having that ability to prove and to test that it's okay, that you know how to do it, that's key, man.
Yeah, and another difference I think between individual people and firms and companies, I think it's the fact that individual will ask you for like a track record, showing them what you do and stuff and how you're going to prepare, while the companies are more going to test you probably and see like what you're able to do over time. They won't like ask you for a track record, I feel.
Yeah, that is to an extent, yes. Most of the firms won't, but if you go trade a firm in person, for example, if you go to let's say SMB Capital in New York City, or you go to some of these places in Miami, like the prop shops there, you do have to kind of get a general background and a relative, like, hey, this is my track record, this is how I've done. But to an extent, if you bring money to the table, they'll match you with money, because remember, in most of these situations, the most money that you can lose is your money.
Right.
Right? Exactly. That's the most money. So if you go in there and just start slinging lead and you start losing a little bit of money and you lose, then, if you lose, you lose. But at the end of the day, you're losing your money, which is already what you're going to do anyway. But at least you had the shot to trade with real power behind it. Because again, if you trade stocks, you have to have more than $25,000, right? And if you trade Forex and futures, the leverage is there to help you, and most people are afraid of that leverage. But again, if you have proper risk parameters in place, that's the key. And these companies will help you with that risk parameter. So they will, again, freeze your account if you lose too much. And that's key, my man. That is key.
Yeah, that's what's useful. So for a Forex trader, for example, what would be the difference between using leverage or trading for other people with the firm? Is it the same thing or different?
That's a really good question. I think it's a little different because using leverage, I mean, if you're trading Forex, you're just trading bigger lot sizes. The other people's money will just give you access to more money. So the term is money begets money. The more money you have, the easier it is to make money. And that's why when people say the rich get richer, Yeah, it's true, man, because when you have money, it's easier to make money with money. So if you can prove yourself, if you have $1,000 micro account in Forex and you're making $100 a month and you know that you can do that pretty consistently, crank that dial, right? Try it out. Worst case scenario, you lose some money, but at least you now know that you have the ability to access bigger numbers, right? So one of my favorite quotes is, "We are not afraid of our inadequacies. We're afraid that we're successful beyond measure." Meaning most people don't fear that they're going to be inadequate. Most people don't fear that they're going to lose money. That's what they think they fear. Like consciously, that's what they think they fear. But subconsciously, they are worried about how much money they could make because they've never thought about it. You know, and when we're talking about trading other people's money, man, some of these firms can get up to a big number. Like the Click Fund, when you're talking about trading equities, they can go up to $250,000 of allocated funds to day trade with. $250,000. And that's a pretty sizable amount. And so when you're talking about just letting the beast free, letting him frolic in the woods, it's because if you're using other people's money, it just gives you more access realistically to achieve your greatness.
Yeah. So here's one thing I kind of take away from what you said: is the fact that you need to push the limit a little bit sometimes, so go higher than what you used to, in order to learn and to kind of know what your limit is. And then you're gonna probably get to a point where it's kind of too high, and then you fall back down. But then you need to adjust and ask yourself, like, how can I get to this level where you were before? And I think that's the power. So then you would work on your trading and work to become better, and that's how you evolve, I feel.
Yep, you're absolutely correct, man. Absolutely correct.
Are there any special legal requirements? And this is hard to answer because it's different in the country, but are there any legal requirements to trade other people's money, OPM?
Yep, exactly. So Alejandro's asking about legalities. A very, very good question. Thanks for asking, Alejandro. So bottom line, you are right, Etienne. It depends on what country you live in. The answer is yes and no. Yes and no. Because if you are using other people's money in a certain facet, you do not need a license. Because if you are unable to lose more than your money or more than a certain amount. So for example, in the US, you have what's called a Series 56, I believe, which is a proprietary license. And that license gives you the ability to access loads of capital. And you also have the ability and the potential and the potentiality to lose more than your investments or to lose more than what you put in. In that situation, you do need you need that license to do that, to make sure that your liabilities are concerned and hedged. But in most firms, to my experience, you don't need any license, because what they're going to do is they're going to make you sign a trader agreement form that says, I understand I can only lose this amount of money. I get it. Once I lose that money, I'm frozen. I get it, right? You're signing these agreements and you're pretty much just saying, yeah, I understand that there's risks in trading. I'm okay and comfortable with those risks. I'm going to take those risks. And I know that you're going to cut me off if I'm losing too much money.
That's pretty cool. So I think one thing it will be important when you start trade for people is to develop your mindset and to ensure that you grow with the right mindset. So how would you go about this? Because I feel like it's a different game a little bit. And do you have any tips maybe for people to develop their mindset, become more confident with more money?
Oh man, wow, that's the best question you could ever ask me. I mean, that's a loaded question, but I love it. Bottom line, is there something you can do to increase your mindset so you're okay to trade with more money? You have to really study your wealth consciousness and what money means to you. What is a lot of money? Like, do you know that answer? Like, do you know the answer if I said, what's a lot of money? A lot of people say $1 million. Bro, $1 million is no longer that much money. You know, $1 million is not, you can buy a car for $1 million these days. You know, there's watches out there that you can buy for $250,000. $1 million is not that much money anymore. So you have to define certain terms, like what is a lot of money? What is a little bit of money? How much do you need a month to survive? How much would you want per month? How much do you feel like you deserve every single month? Because when you trade other people's money, it is a slow process initially, Like, it's not like you just go in, you hop in, and boom, you have all this money. So now you're just going to make tons of money. You have to be okay with making money, like internally, because a lot of people will find themselves being totally fine taking small profits and big losses. And you want to know why? The fear of greed. Now, I'll explain what I mean by that. A lot of people inherently and subconsciously feel that they are greedy for trading the stock market or the Forex or the futures market. They feel that they're greedy, and they feel that they're greedy if they want a lot more. But here's what happens. Subconsciously and consciously up front, nobody wants to be labeled as greedy. So if you say, yep, if I make $2 million, I would love to have $2 million, but I don't need any more than $2 million, because if I get to $15 million, then that's just too much, and now I'm greedy. What will inherently happen is every dollar you make, you're getting closer to what number? The greed number. You're getting closer to becoming greedy, and your mind and your body will not let that happen. So what will you do? Self-sabotage. And that's one of the biggest breakthroughs I've ever taught and learned in trading. And that's why people all the time, all over the world, will be very comfortable taking small gains. Let me take 50 bucks here, 50 bucks here, 50 bucks here, 60 bucks, 100 bucks, 200 bucks. And then boom, I just lost 1,000. Why? Why did I lose 1,000? Is it risk mitigation? Nah. And sometimes you'll go back through it. It's because for a number of reasons, because your mind doesn't want you to make money. So yeah, man, you've got to go in and you got to really wrestle with yourself and figure out, are you okay making tons of money? Because you're not greedy. You're not greedy. If you, at any point in time, said in your mind, if I make more money, I'm going to help XYZ person, or I'm going to do XYZ for this particular person in my life, that's not greedy. If you want to give, if you want to donate, if you want to do anything with your money other than hoard it to yourself, you literally and inherently cannot be greedy. So I would tell, for most traders, and here's the crazy part though, man. Everyone in the world says the markets are controlled by what? Fear and greed. Yeah. And so we are taught to believe that we're greedy, where they call the people who make money trading greedy. Even though they're not greedy, all they did is figure out that they can have all the money that they want, not be greedy, because there's tons of money out there. Money is limitless, so you can have as much as you want. They'll never run out. You're first. Dude, once I realized that, game changer, because then I could go and make as much money as I wanted to and not be greedy, because I know I'm not greedy. I give so much of my money away, man. It's insane. But I want more. That doesn't make me a greedy person, because if I have more money, I can help more people, and that's just easy formula.
That's awesome. That's really cool. And then how would you prepare yourself as a trader for other people when you have your first drawdown?
Yeah, I mean, the first drawdown, without question, is going to happen. Like you're certainly going to lose, and you have to remind yourself. And what I do is I remind myself of some of the best the best athletes and the best professionals in the world. For example, Michael Jordan, 50% from the court. I think he shot 49.8%, not from the free throw line, but just from the court. Wayne Gretzky, I mean, greatest hockey player of all time. I know you're a big hockey fan. Missed, I don't even know them. I think it's like 76% of his shots. Baseball players, I mean, come on, dude. Like, if you hit 300%, if you hit 0.3%, insane. Like, if you just hit 30%,
yeah,
you're one of the greatest players ever. Like, you're in the Hall of Fame. So I remind myself, okay, it's not about how much you win or lose percentage-wise. It's about how much you lose when you're wrong, and being okay with that, and also changing your mindset with that. Because what I do is I try to change my mindset. If I have a drawdown or I lose, I think of a trader that I know, like you, for example. I've never done this with you because you trade Forex and I don't. But just as an example, I'll think of someone that I know. And when I lose, I go, I gave them money today. Awesome. And I just think of me giving money to someone that I like, and it makes the pain a lot less because I go, man, that wasn't that bad. Like I gave it to my good buddy Benjamin today, or Robert Falco, or Dean Chance, or Stephen King, or Brad Reed, or LaToya Smith, or whatever. I just think of these people and I go, yeah, they were better than me today. Just like if we're playing poker. So if me and you play poker today and we sit down heads up and you beat me, dude, my good buddy just got some of my money. He was better than me today. Like, how can I be upset about that? You beat me at battle. Here's the money. And so it's, dude, that's the mindset, man. That's the conscious decisions that you have to go with every day and be okay with that. So yeah, you're going to lose. You're going to miss. Losing is entirely different than failing. That's two different things. You will lose. Failure is something entirely different.
That's a really cool example. We love that. That's awesome. And then I got a question today about someone was asking, so how often would you withdraw money from your account? Do you do it every month? It's like, obviously the account will grow. You will be able to trade bigger. But do you want to withdraw every month, every year, every 5 years? I don't know. How often would you do this on other people's accounts?
Killer. Yes, yes, yes. So how would you know, when do you draw out money? Obviously, the answer is monthly if possible, but it does come down to, do you need it or do you want it? The best example I think I can give in that situation would be, I do try to pull out money every month if I'm able to. Obviously, you have to have a profit to pull out money. But if I'm able to every single month, which I've been profitable every month for the last 4 years, I will pull out usually 70 to 80% of that whatever I made that particular month. Leave a little bit in there for growth, but I'll take out 70%, 70 to 80%, just depending on how much the bills are that month. And if I need more, so 80%, I take some of that and put it off to taxes. So usually about 50% of whatever I pull out, I'll just shove into another account for tax purposes. Is kind of my goal and my plan. And I'll put that into something like, like an Apple, right? Or a British Petroleum or Walmart or Target, something pretty stable and safe. I mean, I'll still look at the charts and everything, but I'll just put that aside for taxes. The other part, I mean, that's your spending money. That's your money that you're going to try to do something with. Because I think of the stock market like a giant ATM, meaning I know I can make some money every month. I want to take that money out and then go do something with that money. Like, what are you doing with the money? Another big shift that your listeners are going to love, man. You would be surprised, dude, how many people when they're up don't take money. Like, it's crazy. They'll say, oh, I was up 10 grand over the last 4 months, but I never pulled it out and now I'm back down to where I started. Why on earth would you do that? Like, you were up $10,000, you didn't pull out money. What do you think the point of trading is? Point of trading is to make money. So you have to reward your brain. You have to do something with your profits. Otherwise, your brain's not going to want to work that hard. If your brain's putting in all this time, all this energy, and all this effort, and you're not getting anything in return, it's not going to continue to do it. So you got to reward yourself. You have to. So even if you're up $100, pull out 50, and dude, go get a bottle of wine for you and your spouse. Sit on like a nice $50 bottle of wine, sit on the couch, drink it together, and talk about your financial future. Just some type of positivity. Man, for me, one of the things that really changed my life is I went to a Thai restaurant. And it was right across from one of my old jobs. I just had a really good trading month. I think it was the first time I ever got a comma in a month. Like the first time I broke that comma mark, that 4-digit mark. And I felt really good about myself. So I pulled out some money. I went to this Thai place across the street, which was like $6 for like a whole meal. And I got the meal. I paid with my card. And before I went to the ATM, which was the Pinnacle, right across the street. Went to the ATM, got the ATM, came back, paid with my card, and I gave the lady a $100 tip, $100 bill. Just said, hey, here you go. Because I've been in that Thai place like 100 times, right? I used to work right across the street. If I would work, I'd walk there and I'd get there and I'd go there like twice a week. So she always saw me, gave her a $100 tip. Dude, almost started crying. She ran around the counter, hugged me. Like my brain at this time is going like, yes, yes, yes. You got to do more of this. You got to keep doing this, man. And if your brain likes something, it's going to keep doing it. And so for me, that's one of the things that makes me the happiest is making other people happy and pushing them out of their comfort zone. Dude, that just thrills me to death. And when that was a big shift, I think, in my trading, is when that occurred, I was like, okay, I'm going to trade to go help other people in massive ways. And that'll make sure that I get fed, I get happy. And if I do that, I'll keep trading profitably.
That's awesome. That's powerful. So Bruce is asking, if you have a 2 to 5% monthly return, is it acceptable for a firm to get funded?
Yes, totally. So a fund doesn't, here's the truth, man. You ready? Here it goes. A fund is there to make money. Okay, simple as that. Think of them like a bank. They don't care how well you do. They want you to be super successful, but they don't care. If you make $200 a month and you pay their fees, they're happy, you know? So bottom line, what you have to do is you have to do a little bit of math and figure out how much money are you going to make and can you cover the fees? Every organization that I've ever interacted with has fee structures of some kind. It's either daily, weekly, or it's a flat fee, right? So you have like a platform fee. Let's say your platform fee is $170 a month. Okay, so so Bruce, that's a very good question, by the way, but do your math. And if you're trading on a $10,000 account and you make 3%, right, that's $300. So if you made $300, you covered their $170 fee. So now you have, what is that, $130 of take-home money. Pull out 75, reward yourself with that 75 bucks, keep $75 in the account, do it again. And then just keep doing that and keep doing that and keep doing that over and over and over. And honestly, so that's the answer, man. So as long as you pay, as long as you can cover the platform fees, the fund does not care how much money you make or how much money you don't make. As long as you pay their fees and they're in business and that's how they make money, they're cool. Yeah. And that's the honest truth. But I mean, use that to your advantage, just like a bank. A bank doesn't care how much money you make. So if you go to a bank and you get a HELOC, home equity line of credit, like you pull equity out of your house, and you take that money and you go trade it and you make $1 million a year and you pay back the interest for the HELOC, they don't care how much money you make, dude. They are in there for them to get paid what they get paid. Just like if you go to a place that sells brownies and you buy 10 brownies, their goal is to sell brownies. They don't care how much money you make. So as long as you can pay their overhead and they pay their commissions, they're good to go. So it's a very valid question, but in reality, the question is more for you, meaning, can you make enough money to cover their fees? And if the answer is 3 to 5%, by the way, Bruce, 3 to 5% is killer. If you're doing 3 to 5% a month, man, dude, even with a $10,000 account, you're there. You've got it. If you have a $1,000 account, it's harder. It's harder because you're looking at 30 to 50 bucks. So every fee firm in the world is going to eat that up. But I would say the average fee, Etienne, the average fee every month for just about any platform that I've ever used or heard of is probably about 150 bucks a month. Average. There's some that are more, there's some that are less, but it's about 150. So if you can make 150 after commissions and after all of that, if that's what 3 to 5% is, you're good to go.
Yeah. So what about Top Trader? How much money do they give you usually to start with?
So Top Step can depend, man. It can depend on how long you're in the simulated fund for, and it really starts depending on your level. But I believe you're getting $50,000 to trade with futures and Forex. But it can really range. So I would say go through the simulated account, man. Again, that's killer. It really is a phenomenal thing to go in, practice, make sure you're getting it, make sure you understand the information. But $50,000 of OPM, other people's money. Here's another reason why it's important and why it's a crucial game changer. Let's say that you have, I don't know, $30,000, okay? And you can siphon off a little bit of that money to get $50,000 or to get $30,000 or to get, other money. So let's say you have $30,000 and you use $2,000 over here, $3,000 over here to get more money, right? Over here that you can make with trading. And now you still have money over here that you can make with trading. So you've doubled your account essentially. And you can do this account with one particular strategy. and you can do this account with a different strategy. And now you have two strategies that you can use and implement in different changing markets. So it could be day trading, it could be option selling, it could be futures, it could be, you know, whatever, right?
Cool. So you'll be trading more then. Awesome.
Great question though, dude. You're killing it. What else you got for
Question
me?
here from Ben. Why do you trade stocks and not Forex? Kind of curious.
Why do I trade stocks? Oh, that's a very good question. So the first answer to that question is it's the first thing I learned, and it's the first thing that I understood. So I always got stocks, number one. Number two, stocks are true ownership in something. So for example, Forex. When you're trading Forex, you're trading money. And money is an intangible. It's an idea, it's a concept, right? And money is purely based on political environments and political structures. So if you have one country versus another country, and I'm sure that's right, Etienne, that they come out with some kind of crazy tariffs or embargoes or some type of news or whatever, assassination or a new government is installed or whatever the case is, it's very, very, very political. Forex is, and you're trading money. So you're trading something that is this massive, broad picture of the overall huge economy of the world. I mean, you're trading the world's economy when you're trading the British pound or the yen or the US dollar. If I'm trading a stock, it really depends on what that company is doing. To an extent, yes, it kind of matters about what the market's doing a little bit, but when I'm trading a stock, I do own something. I own a piece of a company. And I can literally go in and look at this company and figure out how much money the company's making, right? How much units they're selling, or how many units they're selling, how well they've been doing over the last 4 to 5 years. And that's a tangible, valuable asset. Like this company owns land. They own something. And so there is some worth that you can literally look at to the books and kind of place it on there. So the reason I trade stocks, that's the main reason. The second reason is I do not know personally many mentors or financial gurus who have made money off of futures or Forex. I'm not saying they're not out there, but I'm just simply saying most of the giants in the world, the George Soros, the Carl Icahn, the Rockefellers, the Vanderbilts, the Warren Buffett, Bill Gates, the Walton family, right? Walton came from he made Walmart, right? He didn't Forex trade, right? And bought shares and became one of the richest families in the world. So stocks offer a level of wealth that I think Forex doesn't. Stocks also offer dividends, right? That compounding growth that Forex doesn't, to my knowledge. Again, I don't trade Forex, but that's my thoughts. And I personally think, man, you have ownership. You have something that's tangible and readable, whereas Forex, you're just trading patterns and political opinions. But again, that's just me, man. Like I know a lot of people who love Forex, and obviously Forex opens you up to, if you live outside of the U.S., you're 90% more likely to trade Forex.
Yeah.
So that's the number third bullet, because when you trade Forex, you have a lot more global consciousness of money, right? So for you in Canada, you care about what the US dollar is doing a lot. You care about what the euro is doing. You care about what the pound is doing, the Aussie dollar. In the US, this is going to sound selfish, but it's the truth. If you live in the US, 90% of us don't care about the other world. Like not me, but I'm saying most of the people in the US really don't care what other countries are doing. We're America. We're the US dollar. You're going to bend to our will. Now, again, I'm just saying that's what a lot of people feel like. So we don't have, as Americans, man, we don't really have a global consciousness of wealth because we don't really care what any other country is doing. We know America's dollar is doing what it's doing, and that's all that matters to us. And is that right or wrong? Obviously, that's wrong. I don't think that's the way it should be. That's just what happens to a lot of it. But anyway, that's the number third reason, is because I did grow up. I'm no longer in that mindset now, but I grew up in that mindset where America's first. Don't worry about any of the other countries. And it's America, 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 capitalism 101, economy is right here, stocks. don't worry about Forex. And when I grew up in that, that's all that I saw. And so my wealth has been generated from the stock market. I know that's a very long answer to that question, but there's like 5 answers. But anyway, that's just kind of my spiel.
But it's a good perspective to have. I think it's good to hear those perspectives as well. And one thing you said earlier that kind of stuck with me is the fact that it seems like you're investing every single penny you have in your bank account. Like you said, you would withdraw money for taxes, put into something like Apple. Do you do this systematically, or is it something? Would you recommend people to do this? Because I personally don't do it too much myself.
Yeah, man, I do, because I absolutely believe that we should all pay taxes. I'm fine with paying taxes. I love paying taxes. I love what taxes do, but I'm not going to pay them early. A lot of people think taxes are a debt. No, dude, that's the government needing your money. They're in debt to you. Right? They need the money from you. So I'm paying them as late as I can because number one, it doesn't affect your credit. Like if you pay them, you know, with payments or something, there's no credit score rating, at least here in the States, that I'm aware of. That if you pay, you know, a year late or a year behind, it doesn't affect your credit. And number two, you can get, well, you have the ability to get so much more leverage with that money. So here's an example. And again, I can only talk about the US. I don't know any other countries and how their taxes work. But let's say you're here in the US and you're an LLC. You're a trading company, right? You created a limited liability corporation. You are your own company. You pay quarterly payments to the IRS every quarter. So every 3 months, you pay a certain estimated tax. And at the end of the year, it all kind of sums up, and then come April, you get to figure out how much your tax bill is. So for me, I don't pay those quarterly payments. I know that a year from right now, I'm going to be paying X dollars in taxes, which is probably going to be like $50,000. So between now and a year from now, I'm probably going to have to pay $50,000. But come April, when I do the filing, I have a CPA, I do the filing, my CPA does all the filings, and he goes, hey, dude, here's how much you owe. And then he gives me 4 months to pay it. I already generally know how much I have to pay in taxes, but the penalty for not paying your estimated taxes is only 10%, about 10 to 12. So as a trader, I personally feel that I can make 20% easily on that money. So I'm going to take that spread all day long and make 20% on the money, and then just go pay the 10% and have that additional 10% gain. That's just the way that's the way I see it. And if worse comes to worse, I didn't make enough money to pay the taxes, I didn't make enough money to pay the penalty. In the States, you can do a payment plan for the next few weeks and months, and you can pay it every single month in small chunks. I do not suggest getting behind very far on your taxes, meaning you do want to be paying the most previous year. So right now, during this interview, it's 2018. So I paid off my 2017 taxes literally like 3 weeks ago, 3 to 4 weeks ago. And it was just a one swoop, boom, here it is, and it sucked, but I paid it. So that's now done. Now here's the cool part. Ready for this? If you pay with a credit card online, they will charge 3% interest on your taxes, which can be a big sum if you're paying a lot of taxes. But if you do the math regarding how much that would be, so for example, 3% of $50,000, which would be $1,500. So that would be the processing fee in the States to pay your taxes with a credit card. The reason I'm bringing that up is if you can get points on your credit card, 50,000 points, that are more valuable than that $1,500, it's a no-brainer. So meaning if you get, like, let's say airline miles, and let's say you done the calculations and you found out that, yep, 3 to 4% is $2,000, and I can buy a flight from here to XYZ and back twice, and that would have cost $2,800, but I can redeem that amount of points, it's a no-brainer. So you do a little bit of math on there, but man, those numbers, dude, those can add up. And so you do want to kind of wheel and deal, wine and dine your way to getting free flights and to getting free hotels. And you can use your taxes for that reason. So anyway, that's one of the things that I do, man. I'm not saying that's right for everybody, but if you're disciplined enough, it can work out really well.
Yeah, being smart with money, I love that. That's powerful.
Yeah,
So if you
dude.
guys have any question for Jeremy, comment below in the chat. We'll have like a few more, and then we'll wrap it up for today. But we can answer pretty much anything you want to hear about. Any question you have, anything you want to hear
Yeah.
about.
Yeah, absolutely. If anyone has any questions, let me know. Chris asked the question, do you know TradeNet? I love equities. I do know TradeNet. Very familiar with TradeNet. Mir Barrick was one of my mentors years and years ago. I'm not the biggest fan of the platform. The actual platform is okay. It's all right. I got some coaching students who use TradeNet. But yeah, it's good. It's international based. So if you're here in the US, again, all I'm saying is if I'm trusting money and I live in the US, I prefer to have the money or the firm based in the US. If you're international, you can have a lot more leniency with that. But the thing is, in the US, man, banks and credit cards are really weary about wiring or lending money international. Because people can get screwed over that way pretty easily. And I don't know how it is in other countries, but all I'm saying is people take advantage of Americans. You'll have a bunch of banks and credit cards that won't allow it to go an international wire or international transfer of a certain amount of money. So just consider that before, go to your bank and ask them. If you're kind of comparing apples to apples, you want to make sure that your bank does have the ability to lend money or wire money to that international prop firm before you go and do that.
Yeah.
But if you're outside the U.S., then again, it's really not that, if it's outside the U.S., it's a lot easier. Ben says, best advice for getting started in stocks. The best advice I have, Ben, for getting started in stocks, it depends on how old you are. But one of my favorite quotes is Les Brown. Says, you don't have to be great to start, but you do have to start to be great. The best advice is get started right now. Find one company, Ben, just one U.S. stock or any stock that you love, a company that you know how they make money, you buy their products, you're a big fan, you love ownership of this company, you tell people about this company, you want to grow, everything about this company is great. And start buying shares of that company every single month. Accumulate shares of that company. Don't even worry about the price. Just start buying it every single month. Every single month, $200, $200, $200, and let that grow. And then while you're doing that, go read a bunch of books on fundamental investing, how to look at a company, how to understand and analyze and read its fundamentals, look at and figure out and determine how it's making money, and start accumulating a position in a particular company, man, because people always laugh at stock traders, but that's until they've accumulated 1,000 or 2,000 or 4,000 shares of a position, and then they're getting paid 4% annual interest on their position. Dude, if you have $1 million in a stock position, $1 million, and you get paid 4% interest, that's 40 grand. Free money that you don't have to do anything with. That's most people's paycheck a year, right? The average American is making less than 40 grand. So you're going to get the average American salary for free without doing jack squat. And, if you're 20 or 30, you could be there before you're 65. I mean, that's huge. So that's my best advice, Mr. Ben Hansen. That's what I got.
I love that. I feel like we've covered a lot today, and it's pretty awesome. There's a bunch of lessons here. So guys, if you have any question for me or Jeremy after, comment below in the comment box. Make sure to answer your question. If you're watching the replay, well, that's awesome. We appreciate it a lot.
Yes.
And, so Jeremy, how can people find you if they will connect with you or reach out after this?
Yes, if you guys want to reach out, I would really, I would love if you could email me. My email address, I'll throw it into YouTube as well. My email address is jeremy@reallifetrading.com. Just shoot me an email. It says remove web address. Oh, okay, weird.
Yeah.
So I'll just say, okay, so Etienne, you can upload that. Farouk, hop over to my website. He says, what's the best resources for learning technical analysis? Go through my website. All the education and information is free. And so at least that way you can learn technical analysis. I personally feel I'm one of the best candlestick analysts in the world. So if you want to learn candlesticks, I think I have a really good history and background in teaching and interpreting and understanding candlesticks and technical analysis. But yeah, just bottom line, ladies and gentlemen, if you want to trade other people's money, or you have a smaller account and you want to grow it, shoot me an email and let's go through some steps together on how we can get you linked up with the right company, with the right direction, with the right foundation, so that you can start trading and slowly grow those accounts, get rich slowly, get rich properly, and understand how the market works. And most importantly, learn the internals of the mind and figure out the mindset. Because once you get that down, there's nothing stopping you.
I love that. And we appreciate the help for people watching this right now. It's going to be awesome. And we'll catch you guys pretty soon.
Yep. See ya.